Everyone, welcome to the Real Estate Tax Tips channel. My name is Cherry Chen, a chartered professional accountant located in Toronto, Ontario, Canada. I'm on a mission to become the Google Map for hardworking Canadians seeking financial freedom. Today, I have a special guest here with me. Given that there is so many news about bank collapsing, so I figure it would be the easiest for me anyway is to get all my information filtered through this guy. So I'm having this guy, his name's Erwin Szeto, to come on to talk about what's happening in this world and what does that mean to Canadian real estate investor. But before I get started, make sure that you give us a thumbs up if you like this video, or hit the subscribe button below if you find it useful. Now, with that, let me turn it over to Erwin to introduce himself, because it's not fair for me to introduce him.
Hi, I'm Erwin. I'm Cherry's husband. It's really hard to explain what I do. I've been coaching and working with investors since 2010. I've had my real estate license since then. I've been investing personally since 2005. I think the easiest way to explain what I do is I'm like an investment advisor. I'm like an investment advisor, but specific to real estate.
So specifically to real estate investor.
Yeah.
And helping.
It's almost entirely real estate. So it's like almost entirely underlying in real estate. And yeah, this just seems to be what I've just been around so long. I've filtered so many deals. I always think that based on everything I read and consuming in terms of data, owning real estate is the best, which is why we own a lot of real estate. But I know of a lot of great passive options as well that we already invest in.
So what do you do for a living? You actually help your clients buy and sell real estate.
Yes, that's my primary day-to-day business. Is I have a team of realtors that specialize in working with investors. We coach them, we help them become successful. We teach them how we do things, and we have a significant track record. Over 350 clients, done over $400 million worth of real estate, almost entirely income properties, and we're value investors. So we're not just like buy a house and rent it out. We're usually doing some decent amount of renovation in order to extract more value and raise rents.
Okay, that's good introduction. Just so everybody know, his part-time gig, or more like his second full-time gig, is to scroll up and down on the phone on economic updates. So this is the reason why we have him here. So tell me what's happening in this world, because we started our conversation on, hey, we have this mortgage that's up for renewal and our bank has reached out to us. Should I renew it now? Because I know the interest rate is still kind of high, but then there's all these crazy things that are happening. So tell us what's happening right now.
It's an excellent question. I'm getting that question as well. I think our renewal is later in the fall?
July.
Okay. July. Not bad. Yeah, we have some time. But the world's always been insane as long as I've been following it. And the times we are in right now is possibly the worst since 2008. We have several very large banks fail. SVB, Silicon Valley Bank, just failed about 3 weeks ago now. It's the 17th largest bank in the US, biggest bank to fail since 2008. Signature Bank in New York failed shortly after.
And so then there are second.
There's a second and a third.
Oh.
Yeah. First Republic Bank, also another regional bank, was more recently, about a week ago. But they got bailed out in $30 billion from the 11 of the other biggest banks in the US. So they are failing. The market's not sure if they're going to make it or not. I don't think anyone's sure if they're going to make it or not, or if there's more coming. It's really messed up. This past weekend, Credit Suisse Group is now no longer. The central bank there, the Swiss bank, forced UBS to buy them. So now there's only one national bank in Switzerland, which is absolutely insane. So UBS was forced to buy. I don't know if they're forced to, but they bought Credit Suisse for pennies on the dollar using their own stock to pay for it. And it's crazy because Credit Suisse was also bailed out. They were bailed out with $17 billion worth of money, and it's looking like they're all wiped out. They got nothing out of it, even though they were bonds, so they were supposed to have rights over the shareholders, but it's really messed up. It looks like they've been wiped out. And this is years after many years of poor risk management out of Credit Suisse. So not sure if this is a systemic problem, if this problem is contained. And then crazy, like the world's largest central banks got together on the weekend. They worked on the weekend. Government people worked on the weekend, which is absolutely crazy, including the Bank of Canada, to announce that they would increase liquidity, which means they're lending out more money, which only means more inflation.
So before we get all excited about what the Bank of Canada had decided, can we just step back a little bit? I think some of the viewers on this channel may not actually know what that means by bailing out, or why the bank failed and how did they fail. I know this whole fractional system that we talked about, if you could just...
It's complicated.
Yeah.
I don't know how much we need to talk about it. I think at the end of the day, you just understand that inflation is coming, because more debt means more money in the system, which means more inflation.
So what it really means from our two-sentence conversation is that the government is bailing them out by printing more money.
Not just our government, but some of the banks were required to put money. They actually call it bail-in bonds. So the central bank in the U.S., for example, required a whole bunch of banks to put together money to issue more debt, have it ready to bail out other banks. So again, more money in the system. And then do I just say that this is absolutely crazy, that in a capitalist society, that private companies are being asked to, well, publicly traded, but companies are being asked to support their competitors, and we're not letting banks fail.
So then the whole system would continue to grow and to go as well.
These times are absolutely insane.
So it's not just the government bailing out, the banks
are being forced to bail out their competitors.
So the banks are required to issue bonds,
yeah.
essentially using their own financials to get mortgages, well, not mortgages, get loans on their books, so then they have enough money to give it away to a competitor.
Yeah.
So then the whole system can sustain. That's what it really means.
And how knows how good the safety is of those investments?
Let's not get into that. It sounds really crazy. Okay, so then what does that really mean to interest rate? Because we are going to solve our interest rate problem.
Right. So let's first start with the States, because we can't really talk about Canada without ever talking about what the U.S. Federal Reserve is doing, which is their national bank essentially that decides rates. So the bond market is expecting on March 22nd, which is we're recording, so that's tomorrow. They're expect over an 80% chance that they're going to increase rates 0.25%. That's in March, and the bond market is also heavily predicting another raise in May, also 0.25%. But then they're calling for a pretty good chance of a cut come the summer of 0.25%.
Okay, so let me just put it into perspective. Even though there is bank failure, there are many bank failures, because 3 in the US, 1 in...
And there could be more on the way.
Yeah, and they're still increasing the rate.
Yep.
So they're increasing the debt that they are going to carry themselves.
Yeah. How expensive the debt is.
Yeah. And then so they have to pay.
And everyone's debt.
Yeah. So that 25 basis point is coming in March, and then 25 basis point is coming in May.
Expected, yes.
It's expected.
High probability, yeah.
Oh, that really sucks.
Yeah, it sucks, but then again, they're pivoting. It looks like the market is expecting the U.S. Fed to pivot in the summer with a cut. And so in the short term, our dollar's going to get whacked. It's already been whacked. Also, U.S. dollar, because it's always been like the global currency. The dollar is one of the best. U.S. dollar is one of the best investments this year. So our dollar is just getting killed. So as of today, our dollar is under 73 cents American, and that's down from 80 cents just a year ago. So for all you people looking to buy like U.S. property right now, like if you're trying to time the market, at least from a currency perspective, not good timing in my opinion. And anyone who went traveling on March break, like over the border, you all felt it. I'm sure none of you were happy with our exchange rate. A weak dollar for us would be great if we exported more things like oil and gas, but we don't seem to do it. We can't get it done. So we'll feel more pain at the grocery store because we import so much food. And most of it's denominated in US dollars. So anyways, yeah, we'll see inflation there. But thankfully, oil prices come down a lot. Oil prices have come down a lot lately with all this economic turmoil. And at the same time, like gold and silver prices jumped when all these banks started failing. Also, Bitcoin jumped as well. So these are very fascinating times. Like Bitcoin completely caught me off guard because it's like the first time that Bitcoin behaved like a hedge for inflation, like it was always supposed to do, instead of acting like a high growth tech stock.
So what does that really mean? Like, I mean, we've talked about the US. Now we need to get back to the Canadian market. Should I be renewing my mortgage now?
Right.
And should I go variable or fixed?
Before we can talk about interest rates, you have to talk about inflation in Canada.
Okay.
Oh, sorry. Yeah, it takes a long time to get there.
Yeah.
And that's unfortunately how my mind works. But I don't understand all this stuff, but I know enough to be dangerous. So for example, February, our inflation rate came in at 5.2%. So that was expected was 5.4.
These are all Canadian contacts, right?
Yeah.
Yeah. Okay.
Yeah. Canadian inflation came in below expectation. So it looks like inflation is coming under control in Canada. And if inflation is under control, then we shouldn't expect any more rate hikes in Canada. It's pretty much, unless something crazy happens, pretty much we should not expect any more increases this year. Bank of Canada is forecasting that inflation will continue to decline throughout the year. So no more expected increases in terms of the overnight lending rate.
That's good.
But because the bond market is doing what it's doing, all these whenever there's turmoil, people leave like stocks and cash or whatever. A lot of investment flows towards bonds. So the bond yield has fell. For example, the Canadian 5-year bond rate yield fell from 3.5 to 3%. So it's fallen significantly. And in turn, you'll see the 5-year mortgage rate fall.
So the
likely
fixed,
this
right?
week. Yeah, the 5-year fixed.
Oh,
So
cool.
never forget that, folks. The fixed rates are determined by the bond, by what the bond market does. So that's already falling. But variable rates, we probably won't see anything until later this year, and when the Bank of Canada finally starts cutting.
So, so what's the verdict? Should I go fixed or should I go variable? Or should I just wait until July to renew?
Depends how much people want to gamble. Based on information available now, my bet would be on going variable. But if people can't sleep at night, people don't like gambling, people don't like risk, then take the fixed. Take a 1 or 2 year fixed. That seems to be what a lot of my mortgage friends are saying. But again, it depends on everyone what they want to do. But if we were going to gamble, I'd take the variable.
So this is very interesting.
Oh, I love this stuff.
Economic
can't
time. And if you can't tell, I'm almost falling asleep. So we need to cut down to the bottom line. So given all these economic information, what should we do if we have $100,000 or $200,000 sitting in the bank account?
I've been saying this for the longest time. If you do not have hard assets, I believe that to be negligent. If you have children and you're not investing on their behalf, we personally invest heavily into our kids' futures. If someone has $100,000 to invest, you need to be doing something with it to invest, right? Something smart. Like for example, we're looking at some bank stocks for ourselves, something that pays cash flow. But if someone wants to truly build wealth, you have to own real estate yourself. You can't invest passively.
So not Bitcoin?
Bitcoin is like a small insurance policy. If you want to get wealthy, all the people I know who've gotten wealthy have done it themselves actively as owners of real estate. And you cannot have, the bottom of the market was likely last summer for the stuff that we transact on for ideal value play income properties, right? And I do not see a better time than now to be acquiring property that generates income. Because rates are likely to only come down from here. We're likely already past the peak for rates. And we're already seeing significant buying activity, and prices have already come up on all the target properties and markets that we operate in. So it looks like it's only up from here in terms of prices.
Interesting time. So it looks like it's crazy out there, but it sounds like it's a good time to buy and get into real estate market investment.
If done correctly. There's lots of things you can do wrong, right? There's lots of people out there who are really hurting right now because they did things wrong. So do it smart, do it systematically, do it boring, do it for cash flow.
So thank you so much for sharing all this information with us. If you have any questions for Erwin, his contact information is going to be in the show notes below.
Yeah. Or hit me up on social media. I'm everywhere.
At Erwin Szeto.
My very boring handles. Erwin Szeto is my name. You can find me on Instagram or Facebook.
Yeah, also on YouTube as well.
Yeah.
So thank you so much for watching. Until next time.